Hello everyone, my name is Gia. Today I would like to present to you the Case 1/2014 Australian Tax Law case. I will start with some important facts of the case, followed by main issue in the case, then some relevant legislation and judgment made to the case, and lastly the implications for practitioners. So let's start. Here are some of the important facts of the case. The case is about a taxpayer, the applicant who worked as an industrial chemist in the year 2003, 2004, and 2005. She received income from wages and salary at work. However, in her income tax returns, she had declared nil taxable income for each of those years. As a result, she received an administrative penalty from the commissioner, the respondent. In January 2011, the applicant decided to make 3 objections against the decision of the respondent in regards to her income tax returns. Firstly, she claims to be carrying on a rental business with her husband in those 3 years, in which they owned 9 properties that was rented out. Due to the loss in business, the applicant declared nil income in her income tax returns in those 3 years. Secondly, her claims relate to interest on borrowed funds, borrowing expenses, a trust, the managing of her tax affairs, and gardening work carried out by her husband. Lastly, she claims to the imposition by the commissioner of an administrative penalty of 25%. The commissioner later stated that they cannot accept that the applicant was carrying on a business because she was still working as an industrial chemist in the relevant years. She was characterized as an investor but not the actual carrying of a business. I will be discussing 2 main issues that arise in this case. Firstly, the judge has to determine whether the applicant was carrying on a business of letting rental properties in the year 2003, 2004, and 2005, respectively. Secondly, is to determine whether the applicant is entitled to deductions in the relevant years. In particular, we are going to see whether the applicant is entitled to deduction pursuant to Section 8(1) of the Income Tax Assessment Act 1997 for all of the part of the interest and dividend expenses claim, and also to see whether the applicant is entitled to a deduction for gardening and maintenance at Section 8(1). We are also going to see whether the applicant is entitled to a further deduction pursuant to Section 2525 of the Act for borrowing expenses. We will now look at the relevant legislation and judgment that was made by the tribunal to the case. In determining whether a person is carrying on a business, the tribunal suggested that the specific factors assist in marking out activities as a business. In particular, is the repetition and existence of purpose of making a profit. And it is stated that there are a multitude of things which together make up the carrying on of trade. According to the ATO guide for rental property owners, it specifically highlighted the nature of the activities and whether they have the purpose of profit making, and also the operating in a business-like manner and the degree of sophistication involved. The applicant was clear that she and her husband had the intention to make profit through the rental business, but it was unfortunate that they were making loss in those 3 years. Also, the applicant is considered as carrying on a business even though she hired an estate agent to look after her rental properties. Section 8(1) of the Act stated that the taxpayer can deduct from her assessable income any loss or outgoing to the extent that it is incurred in gaining or producing her assessable income, or it is necessary incurred in carrying on a business for the purpose of gaining of producing her assessable income. It was found out that the applicant claimed the amounts as deductions in relation to attendance at courses, audio packs, and other educational materials. She had incorrectly included them in her return as interest and dividend expenses. The court accepted that the applicant's evidence was that the courses she undertook instructed her on how to negotiate, renovate, how to deal with tenants, and how to buy and sell property. The couple showed their intention in attending was to learn how to earn more income, improve their knowledge, and improve their existing rental units. Therefore, the applicant could only claim interest and dividend expenses relating to the courses that she has paid and attended to increase her knowledge in order to help herself when she is carrying her renting business. In order to determine whether the applicant is entitled to a further deduction for borrowing expenses, the tribunal applies Section 2525 of the Income Tax Assessment Act 1997. The Act provides that the taxpayer can deduct expenditure she incurred for borrowing money to the extent that she uses the money for the purpose of producing assessable income. The respondent allowed borrowing expenses pursuant to the Section 2525 in the amounts of $362 and $373 for the year 2003 and 2004 respectively that the applicant incurred due to the refinancing of borrowings for construction in those 2 years. The respondent also allowed borrowing expenses that is related to the properties which was incurred by the applicant in the year 2005. To determine whether the applicant is entitled to the deductions of trust income claim in 2004 and 2005 income years respectively, the tribunal referred back to Section 8.1 of the Income Tax Assessment Act 1997. The applicant acknowledged that she did not receive any money from the trust and that the trust was set up for the purpose of providing tax deductions. Since the applicant had not received any distribution from the trust, the respondent did not allow the deduction claim for trust income. In relation to the gardening expenses that was claimed by the applicant, it was found out that the invoices were issued by the applicant's husband and they are dated in 2016. Since there is no evidence of payment made, the gardening expenses will not be deductible. Lastly, in regards to the cost of managing tax affairs, the respondent only allowed the legal tax fees that arise from the tax agent who work for the applicant on her tax affairs. This also relates to the importance of hiring professional tax agent because the applicant could not claim any tax affairs that was made by her husband since he is not a recognized tax advisor. As a result of all the errors and mistakes that I have mentioned previously, the court held that the applicant did not take reasonable care in filing her income tax return that she is obligated to do under Section 284(75) and Section 284(90) of Schedule 1 of the Taxation Administrative Act 1953. She has claimed for items for which there is either no substantiation or for which substantiation has been created subsequent to the event, such as gardening claims and advice in managing the applicant's tax affairs. Therefore, the administrative penalty of 25% will not be remitted partly or fully. In the last section, I will be talking about implications for practitioners. This case establishes a set of legal standards that practitioners should take careful consideration of when determining whether a person is considered as carrying on a business or not. Look at multiple things surrounding a business, which includes the nature of the business itself, business owner's behavior, and contribution to the business. The case also pointed out the importance of identifying each element of expenditure that was incurred in the business to determine whether they are deductible according to the Income Tax Assessment Act 1997. Lastly, Practitioners must always ensure that the taxpayer's income tax returns are fully completed with reasonable care by the taxpayer. Finally, here are the references that I have used in my presentation. Here comes to the end of my presentation. Thank you for watching, and I hope you find it helpful.